Hey everyone, John Henry here, slingshotfutures.com, and welcome to the daily market outlook on the futures markets for tomorrow's trading. In this case, it's going to be for the 17th, finally Friday, on our Big Six markets. Those are the markets that we trade the most between the bund, gold, and the bonds, as well as crude oil, NASDAQ, and the S&P 500. What a day today. Holy cow. What just chock full of movement. It really was kind of a surprise given yesterday, all of the big news, the FOMC and the interest rates and all the other stuff. A lot of times after those big days, the market wants to take a break, but it sure didn't want to today. Lots of good movement on the docket today. And if you followed your plan and stuck to those rules, you probably had a pretty good day. If not, make sure to swing on over to Slingshot Futures, scroll down and click on the Join the Daily Outlook newsletter so you'll be notified every single time one of these comes out, so you'll know ahead of everybody else when they're posted so you can be as prepared as possible. We talk about different stocks and different statistics as well as the Outlook video itself. Now, along with that, every single morning at the bottom we talk about the market psychology. Every day. Once a day, we go over a specific market. We talk about the psychology on that market in a way that we can learn more from the moves that day so we can better ourselves for tomorrow. And as always, we have our morning prep levels at the bottom every single morning so you are ready to rock and roll there. If you haven't already yet, make sure to subscribe for the one-day trial. You can have a free one-day trial, and if you really like it, then you can subscribe to it as well. Or if you really like it, then you can become a member. And as always, if you have any questions, you can email me about that. Now, looking at the overall movement, we're looking at the bunds with some pretty good downward momentum, especially towards the end of the day. Big dive lower here, and that opens up some downside objectives with a huge seller's target at 158.82, and that's kind of what we're looking for here. We have a descending wedge working its way lower, and the market has had a big drive into a pause, into a big drive, into a very long period of pause, and then another drive again. So in the grand scheme of things, we kind of have one of those three push wedges. It's just that middle portion of the wedge took forever for it to kind of get out of the way. So this downside momentum, it may be limited, right? But we do know that we have some bearish targets below us at 158.82 for the sellers to try to go for. It's just a matter of whether or not they still have enough gas in the tank to really drive the market down. Now, what I would really like to see is a slight little correction higher here out of this wedge. This not the big wedge, but we are setting up a slightly smaller wedge that I wouldn't necessarily mind getting out of inside here, where a little fake break to the highs could add a lot of emphasis to the downside for the sellers to try to jump in above that 159.29 area for that leg lower. If they want to get a little more juice in the tank to the upside, 159.44 is the next area of confluence, and that's also the prior low of day from Wednesday. So nice areas to become sellers. I'm going to have a hard time selling this far down. I would prefer to see the market get a little bit further rather than getting stuck where we are now. So either a little pop higher for a trap into selling or a drive down on explosive breakout movement. Either way, looking to sell, but preferably at a better price. Over on gold, after yesterday's rally higher, we did have a little bit of that range-bound momentum, but not before we had that massive rally to the upside. It's just after that rally to the highs, we put in a top, huge amounts of liquidity and inventory being put in up here between 34 and 32.2, and they never came back. And arguably, we're forming a little bit of a wedge from the top down as well as the bottom up. And we also have a shallower wedge right inside here. So right now, the market seems to be a little bit more confused on gold. Buyers very obviously don't want to buy high. And if anything, that big rally up was the final thing where the buyers said, you know what? Good enough. Get me out of the trade. I'm going to take my profit. I've been long since yesterday. I want to get out, right? So with that rally to the upside and a complete failure back down, we may just cycle into a range. When it comes to a range, in this case, zooming out a little ways here, we can see the likely area of a range would be between, well, the wedge that we're seeing now, but the range looks pretty good right through here. I had a little bit of a breakout to the high side, it failed, and we're starting to come back in. Now, this whole thing may be the range, but if we can start breaking down, this is an obvious spike into a very aggressive channel working higher, if not kind of an expanding megaphone to the upside. And if we can get a breakdown, we're looking for massive buying support around those lows at 12.18 or so. Prior month support also at 17.5 in that same location. So I would love to see a big dip down there, but we might not get it tomorrow. Might have to wait until next week. In the short term, we do have that possible range setting up in what we're looking at in a little bit of the closer term, with the range lows potentially being put in right now at 25.7 down to 25. And if they do want to break lower, the overall low at 23.5 1.5 should find some support there as well. So we know what to do with the range: buy low, sell high, stay out of the middle, and right now we are in the middle. So we need to wait for price to get out of here before we can start placing some trades. Over on the bonds, beautiful drive lower, and with this massive breakout to the downside in the early morning session, notice this was at 3:30, 4 o'clock in the morning Eastern time, we went into a range afterward, and we haven't really left that range. We've been stuck here for quite a while. Now, that did set up, this big drive down set up a beautiful target at 147.14, and it hit it to the tick. Now, when we're talking about big objectives like that, I don't like seeing it when it hits it to the tick, because that's going to leave a lot of traders unfilled. Even if they had their orders, you know, if they got in here and they've been leaving their orders there for the past 6 hours, it's the bonds. This market trades thousands of contracts. There's still going to be traders that don't get filled to the tick like that. So I would like to see the market come back, tick through that 14 area to finish off the sellers that are looking to take their profit targets there. Outside of that, though, we do have a range between the highs at 147.29 down to 147.20. Seems to be the best fit. We had that little triple bottom right there, the breakout into the objective, immediate failure right back in. And you can see that area may widen out a little bit. It's not being respected as aggressively. And it may just be that the high of the range up here at 29 and the low of the range ends up being that major sell target from earlier. That could be the range that we get stuck in. Either way, like we were just talking about on gold, we know what to do with the range. We're looking to buy low, sell high, preferably in this case sell high, and stay out of the middle. And right now we're just kind of floating around the middle. So what I would like to see is a correction back above towards that 29 area before we get down to that 147.14, but we might not have a choice, and we may have to wait until tomorrow to give us some more information. Over on crude oil had a very nice tumble off of the highs for most of the morning session. Nice bearishness working its way lower, but now we're getting a little stuck. We had some just beautiful breakout moves, breakout move, breakout move, breakout move, but they're running out of steam, right? The sellers, you could see that easily back here, where the sellers just, they lost it, right? They're not gaining that confidence to the downside that a lot of traders want to see. So when it comes back, sellers that are selling into this rally are just looking to take profit back at the low of day. Same thing here, profit at the low of day. They try to get a breakout, terrible follow through, immediately turns right back in on itself and goes right back towards the prior low of day, also a trap high. Lots of interest on the high side, but also a lot of interest on the low side, and we could potentially be forming yet another range here with an area of massive interest. I would love to look for selling pressure in 49.06 to 49.02 if they can get over there. Otherwise, looking at the range highs, seems to fit best around 48.93 or so, give or take a little bit, and you could probably draw up the zone between the prior low of day and 48.93, but that area is what we're looking for in terms of selling high. In terms of buying low, any one of these swing lows, given the amount of traps that we've seen on all of these swing highs, all of the swing highs seem to have had a trap of some sort, and they've all come back. So all of these swing lows will be key areas of interest on the way down. So 48.68, 48.60, as well as the major low at 48.45, but the low of the range does seem to fit best around 48.51 to 45, or slightly more aggressively at 48.60. So those are the areas that I would consider low that I would like to buy into, and in terms of the highs, right now we're just stuck in the middle, right? Like we were saying all through this video, we know what to do with the range: buy low, sell high, stay out of the middle, and unfortunately for crude oil, this is also stuck in the middle. On NASDAQ, very much the same, range-bound movement, a little bit of a wedge. We're trying to break out of this wedge that's been forming for the last, 5-6 hours now. So with this wedge that we're trying to break out of, we're popping directly into an area of major resistance, 54.18 half down to 54.17 and a quarter, and that's an area that a lot of sellers may regain interest to try to sell high to drive the market back down again. This is an awful lot of bullish aggression here. I don't necessarily know that I would want to sell directly into this right now. Because of the amount of bullish pressure that the buyers are putting up, I would rather wait for respect, right? Show that the sellers want to hold this, than for them to come back and sell here instead. Makes a little more sense given the bullish pressure, and it gives the sellers a little bit more of a shot to the downside. Either way, we are high, looking to sell, but preferably with kind of like a little stumble type of pattern where the market just kind of stumbles over itself and falls back down to the lows. And then over on the S&P, we're seeing very close to the same thing as we saw in the NASDAQ, but with a descending wedge working its way lower. The S&P also in its area to potentially sell, but once again, a decent amount of bullish pressure working its way higher. I don't want to be the first one to the party selling above that 81.25. In the range, in this zone really of 81.25 down to 79.5, this is where we want to look for selling, but the same thing holds here. This is a lot of bullish pressure. I would rather wait for them to hold it, come back, and then give a selling opportunity as the market kind of trips over itself and fumbles the ball back down to the lows, where we can then look to buy back the positions. So looking to sell, this is the area I want to sell, but we need to see the market show up with a little bit of selling pressure as proof. So that's going to do it for the outlook. Now looking at tomorrow's news, there's nothing. We have a blank slate for tomorrow. Now, after a week like this that we've had with such phenomenal movement, tons of big news, all kinds of stuff going on, I have to imagine that there are going to be a lot of traders, just like yesterday we were talking about how traders are going to probably wake up a little bit late today because they're sleeping on that bet of money they just made the day before. Well, now we're talking about Friday, and it's kind of the same situation. There's no news, nothing to keep the markets going, and that goes for the European currencies, that goes for the US, all the big stuff, right? So nothing really to keep the markets moving tomorrow, and that may just be a day where all of the traders say, you know what, I've had a really good week already, I'm just not going to trade tomorrow. So it may be a little bit slow and grindy, but that lack of volume may increase the volatility too, and we could get some decent moves earlier in the session. So be a little bit careful going into tomorrow's price action. Could be an interesting one, but outside of that, as we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Have a good weekend, everyone, and we will see you all later.